Hi, thanks for tuning in. This is a weekend review for the week ending June 24th, 2022. We're looking at a chart of the S&P 500. This is a weekly chart, which means each candle represents an entire week of trading. We've got a lot to discuss, so let's get right into it. The bulls closed above the gap that was left open from the close on the June 6th, or this candle right here. The bulls looked like they were closing below the bottom of this channel, which leads to a breakout to the downside, and it was instantly recaptured. So that is very, very bullish. You've got a gap here on the weekly, which is pretty rare. And the question I have is, what type of gap is it? So we've been in a downtrend for 6 months and was pretty overextended here towards the tail end of it. I think you were looking at like 13% decline in 2.5 weeks, something like that. And this came at the very end of it. And so in order to tell what type of gap it is, right, which will tell us where we are in the length of this bear trend, okay, we need to look at the volume and how quickly the gap got filled, and then where is it in context to the rest of the price action. So the volume on this down week, this gap and go, came in right around 12.5 million on a 75-day weekly average of 7.6. So we're about 50-60% above average, which puts it in the category of, generally speaking, exhaustion gap, breakaway gap, or runaway gap. All must have above average volume. So the common gap, really the least significant gap, the gap that gets filled all the time, and when it gets filled and when it gets created, it really doesn't mean anything. Those have below average volume. Again, this isn't really a science, this is an art. This, to me, when I saw this gap, looked like a runaway gap, like meaning this is halfway through the trend. And so if the downtrend started right here, and here's where we got this breakaway, I would be expecting this much more time in the trend. Okay, that's what I see. So when I first saw this, I got very bearish, especially given how she closed below the bottom of the Bollinger Band, which generally signals a breakout. But this time when she did it, she didn't go back to the 20, right? So she'd already been below the band 1, 2, 3 times, recaptured, instantly went right back below. This time didn't have nearly as much juice as the previous 3. To me, it looks like the bears are extended. ADX also looks to be inching higher, but also, could be putting in a lower high. Everyone's watching this 200. I don't think playing the market is that easy. Okay? I don't think they give you what you want. I think everyone wants this 200. So I don't think it's coming. And they could have had it. They could have hit it. They were there. Okay? And just like here, when everyone wanted it, you put in this big wick. It wasn't the destination anyways. They sliced right through it. It's never that easy. So just get that idea out of your head. All right? But the point of me bringing up this gap here, and why I'm talking so long about this gap, is that if this was a runaway gap, it would not have been filled. Okay, if this was a breakaway gap, it would not have been filled. And if it was a breakaway gap, it would have occurred somewhere back here at the start of the trend reversal. The fact that it's occurring 5 months in, the fact that it got filled right away, and the fact that this candle here on the weekly is, and I know it doesn't look like it here in TrendSpider, but I've confirmed this in 2 other platforms, is the highest volume weekly candle for the bears going back to the COVID low. And this one here, January 24th, was the highest for the bulls going back to the COVID low. So when you've the same way, when this candle closed below, that signaled pressure for the bears. I believe that's what is being signaled right now for the bulls. If you're a bear and you saw all of the price action, all of the trading, the close at low on week, and now you've recaptured, closed above the previous week, which had way more volume than the week we just put in, that would be a very bad sign for a bear. You don't want to give up and retrace a large move, right? The bears just put in this move here. You don't want to give up that move on low volume. Because what that tends to imply, whether it's in an uptrend or a downtrend, was that all of that buying was capitulation buying, or all of that selling was capitulation selling. It's the end of the auction, and they all end the same way. Okay, it's the tail part of the bell curve, where you can get all these low prints, you can get all these low participation prints on the chart. That's not what you had here, June 13 for SPY. That's not what you had. You had high participation to the downside. Okay, and now you've got one candle that was a gap and go on the weekly. And so I don't think anyone has a lot of conviction either way, but I'm telling you that you should try to learn your gaps. They're very important. XLE had one this month, and it ultimately led to continuation to the downside. And I think this move is done. I think energy will rally one more time with the general market, but I think the energy trade is over. And it's been going on for 2 months. 2 years and 2 months. Now, it's not going to just go to zero, okay? There's going to be a zigzag, just like there always is. And if it's a really, really bad environment, that zigzag will turn into something like this. But this is a breakaway gap. It had in a lot of volume. Again, TrendSpider doesn't do the best job of showing volume. And a close below all the moving averages, the 510 bear cross, PPO pointing down, histogram negative, and ADX curling up, which is telling me that it's starting to trend lower, which is not what you want to see. Again, so these breakaway gaps have a lot of significance. You have to be paying attention to them. And again, if this is a common gap, right, then it means that price is likely to come back down here and fill one of these gaps that she just left open. Like, what gap is this here? And so it's not very clear, and it is an art, not a science, right? And so I don't have above average volume on the 24th. So this looks like a common gap. It's below average volume. It cannot be anything else. So I would expect this gap to get filled. And this is really the line in the sand for the bulls this week, 378. I would expect them to rally higher and try to fill this gap. But if they pull back first, you could have something else going on. And really, the way I view this setup right now is markets are always symmetrical, okay? And this move here was essentially 5 bars, 13% lower, right? Maybe 6. Yeah, 6 bars, okay? So I'm expecting the same thing in reverse. And if that's what the bulls put in, then you already start to get this picture of an inverse head and shoulders. Okay, and so this is the obvious sell setup. If they rally up here by the end of the month to 401.80 to end the month, June 30th, that's the sell. But again, these parabolic moves, they all end the same way. They come crashing down to earth. And this parabolic move that occurred right here is over. It's done. It's finished. So that is telling me that was the finale. That was the ending. All right. It was either wave 3, where crap was about to get real bad, close below, etc., or it was the finale. And so when I look at all these charts that we're about to discuss, you got to keep an open mind that people have no idea what's going on right now. There's sentiment at 50-year lows. We'll take a look at that one here. This, Michigan Consumer Index. They've been doing this one forever. This sucker just broke the lows. Just broke them. So it's never been this bad. Ever. All right. And if you look at where we are on the quarter in terms of all these guys that I like to track, 10-year yields are up 35%. And as a result, DBC, the commodity ETF, is up on the quarter. But gold isn't, energy isn't. A lot of these oil names aren't. And as you would expect, all the soft assets are down a lot. Right? And that's what you see with this relationship between TNX, all the soft assets, and DBC. And DBC here is at a very critical point in the chart. The commodity index looks to be breaking down. And we've got the PPO bear cross on the weekly and could be putting in a monthly reversal candle. So again, you've seen sellers here. This is a reversal candle. Okay? I've got about 5 of them that I love to use over and over and over again. And one of them is a large wick. So if you see a candle that has a ton of volume, it's after a run, a long run in either direction. It's got a ton of volume. And the wick is more than half of the body, right? This whole thing, that's sellers or buyers. In this instance, it's sellers. And if you've noticed, they could only close one time here above before they instantly found more selling. And to me, this is over. It doesn't matter anymore. They're going to try to save it into the end of the month, but it's done. This momentum is accelerating to the downside. This is capitulation, blow off top, retail buying, all dumb money piling in. This is that parabolic rise that we talk about. There's going to be a parabolic move to end the auction. And here's a nice little triangle. It played out, and now you're below it. It's over. The move's done. And if you don't believe me, show me a chart where the momentum isn't rolling over and sellers aren't flooding in. They stopped buying. So what needs to happen at a minimum is for price to come into this zone. That's just the reality. It doesn't mean there won't be bounces along the way. Of course they'll bounce off the 21s. They haven't touched it since December. All right, but a lot of the time, from where I sit, the 5 and the 10 are a way better indicator of what the trend is doing than the slope of the 20 or whether or not price is above the 20. If the 5 is going to cross below the 10 here this next week, which hasn't happened yet, but it looks like it's about to happen, and the 1226 PPO cross has already happened. If this 510 crosses below and you lose 27, there's not a lot left until 23. And what's likely to happen is something like this, at a minimum. And then everyone will hate commodities again, and you can play commodities. But the commodity trade is really just a reflection of this trade. And from where I sit, this trade looks long in the tooth. It's got all the bearish divergences you want to see for a major top. We've got this doji after a prolonged move, a 6-month move with no pullback to the 20, rallying 150%, and you get this candle. Not a good look. You've got the PPO bear cross, but as I just said on the other chart, look at the 5 and the 10. This can definitely keep going higher. Okay? But it's unlikely to go much higher. And what do I mean by that? Even if she does happen to go higher, the upside is capped. And again, I'm kind of in the camp that this may have already hit the target. Okay? If it hasn't, that's okay. Maybe she's going to come up here for one more rip your face off rally. Right? And you've got this down here. So this broadening, I'm expecting this sucker to come all the way back down here at some point. 2 5s, if not lower. So we'll see how this one plays out. But this is what's driving the DBC, the commodities trade, the oil trade, the energy trade, the gold trade. It's also what's driving the bond trade. And look, we don't have a bottom in bonds. We don't. All right? We can't get above the 5. That's a big wick. Like I was just telling you, we don't like the wicks. That's not good. Can't get above a declining 20 or the 40. All right, 107.11 is a possible destination if this 108.11 level is not correct. But from where I sit, this doesn't look done. And you know, this is likely what will happen if she gives up the 10 here, and she gives up 110, 111, that whole area, then I don't see why 107 is not in play. That being said, there are plenty of opportunities here. I think KWEB is still one of the top opportunities right now in the market. Their rates are going down. Their rates aren't going up. They've lowered rates. That's what their monetary policy is doing. Sentiment across the board is just completely washed out. We've seen that in terms of NIAM exposure. We've seen that in terms of, so like here's the AAII bull bear spread. Give Urban Camel a follow on Twitter. He's the one that put this one out. But you can see, you know, the AAII bull bear hasn't really been this bad. But 2 other times in the last 35 years. So the sentiment is hitting really, really extremes. And remember, last time it took a .com crash, a rally, and another crash for sentiment to get this bad. All right. So, you know, either way, you have to be open to the idea that sentiment will turn the market. That's what always happens. It turned the market at the top, and it turns the market at the bottom. When everyone's washed out, and from where I sit, they are, you know, you get the big moves, right? So the percentage of investors who are bearish is definitely the highest since 2008. That's what I just showed you. You can look at things like the NIAM exposure. This is as low as it's been since COVID. You can look at things like the highest Russell short since 2008. It's not even close, right? So like everyone is short, everyone is bailing. Finally, from JP Morgan is bailing on their stonks, right? This past week was the heaviest week of retail selling since 2020. They're bailing. They don't want to be here. On Friday was a 100% up day in the NASDAQ. Remember I was telling you, right? These moves that we saw on the way down, we had 100% down days. I remember these were 100% down days. And what did you just have? You just had 100%. It's the mirror image of what you just sat through. And that's what they do, man. The same people that just piled in short are now piling back in long. And I don't know why. And I'm not saying things are going to the moon. I'm saying they're probably coming up here by the end of the quarter. 401. That's the target by the end of the quarter on SPY. And once you get there, then you'll get the pullback to start Q3. But don't be fooled. It's all about the end of the quarter. Here's another breadth indicator, sentiment indicator telling you it's a washout. This one from Shivaco Capital Management, CCM. They do a great weekend video every weekend. I highly recommend, if you have time, check it out. This was my favorite chart that they posted this weekend. All right, 10-day moving average of the NASDAQ greater than the 150-day. Going back, you're looking at 10 times it's been this low. Only one of them, it went lower. Okay, the point of me bringing it up isn't to say this is a buy signal. It's not. This is more evidence that sentiment is completely washed. And small option traders are sitting on 600 million in losses, like the most freaking ever. Again, ever. And these were estimated gains of 1.25 billion back at the peak when everyone was sitting on paper money. Now everyone's sitting on real losses. All right, so let's get into some more charts here. We beat SPY up, we beat TLT, we beat all that. Let's take a look at IWM. Same setup, trying to get into the gap, didn't fill the gap. Okay, so we've got some weakness here, but same divergences, same setup across the board. What I want to see here to give me a clue, right? Do we fill this gap? Do we capture the 10? Or is this headed to 150? Right? Because she came down here and filled the gap. So they've filled all the gaps. Let's clear all this crap off. This gap has been open since the COVID low. Okay? This gap right here has been open, as I say again, the 166 since the COVID low. I'm sorry, before the COVID low. And it just got filled this month. It got filled last week. So I take note of that. This has a TD9 buy setup on the monthly. And let's throw the indicators back on here to show you where the bottom of the band is. Look, PPO's monthly reset from 11 to 2, which is very, very good. If you want to see mean reversion, right? Big move, revert to mean, blast again. That's kind of how this stuff should play out. If it doesn't play out that way, something else is going on. You generally don't see stair step lower like this, right? You see fear lower. This is a stair step lower, akin to what you had right here. Akin to the 2015 to 2016 correction. Why? Because it looks like a zigzag, and it is a zigzag. See, it terminates at the 1236. I think that's a similar setup that you've got right here. Something like that. Maybe it, again, this isn't something you can trade off of. This is just an awareness. Maybe it's got to come to 155, right? And again, I'm not opposed to another low. I think another low could certainly happen across the board. But what you can't be doing as a trader, you can't be sitting here through this period and be bullish, and then sit here through this period and be bearish. Okay? That's not how this works. This period right here, when the 5 crossed below the 10, that was your signal to sell on this day. And I know you didn't want to sell this day because, hey, you're already down 3 days in a row. But that's the day the signal was generated. Just like right now, On June 24th, this same signal is generated. The 5 is crossing the 10. So you have a very clear signal for short-term trading. Some very clear targets, some gap fills that you can go for. So across the board, I'm seeing the same setup everywhere. Now let's talk about where's the relative strength. I think it's in KWEB, like I was telling you before, which means you can look at names like NEO, which again has led, 111% gain going back 1 month. So, you're telling me swing trading's dead. You're telling me stock trading's so hard. And trust me, it has been. But since May, since March, swings have been paying. I know that's hard to understand because your swing trade may have not paid. But there are lots of swing trades that have been paying since that time. DNMR is another one. Anytime she comes down into this zone, she's rallied a very, very good amount. Okay, so there's definitely relative strength. And what you'll find out as you go through this cycle, and whether we're bottoming now, whether we bottom in 2 months, whether we bottom in 2 years, it doesn't matter. It's the same process. That when there's a bottom, there will be new leaders. It will not be the same NVIDIA leadership. This thing has done nothing all year long. And going back to the low of May is only up 9%. Do you think it's going to be Apple that's leading us higher out of here? No. So let's take a look at the Qs. Do you think it'll be the Qs leading us higher out of here? It may. It certainly could be. They've been the leaders before. Why can't they be the leaders now? But I would say if you think it's going to be the Qs, and it may, I'd say also take a look at ARK. 34% in the same time frame as the Qs. Okay, so you don't even have to play the individual. You just touch the ETFs. But I'm not seeing that in SMH. Historically the leader. Okay? She's up 7%. That's all she can muster. That's nothing. Right? Why would I take all that risk if I could just play SPY? And if you look at this, you want to start analyzing relative strength. You want to start looking at who's performing well, even though we've put in a low, who's performing well, right? And we broke that low. So this low here was broken. But each time, certain names were able to repair the chart. So again, with KWEB, each time that low was broken, and again, they're all soft assets, they're all positively correlated, she put in higher lows. So the weakness in April and May, that was actually a buying opportunity, not a selling opportunity. Those were buying opportunities. Unlike XLE, these were all selling opportunities. The whole quarter was a chance to liquidate XLE. The whole quarter, they were distributing XLE. The whole quarter, they've been accumulating KWEB. You see the difference? All right, and it's not just China stocks, right? There are other stocks here, like PLTR is one that I like. Just look at what stocks bottomed in May and put in higher lows, even though, and you can scan for this, even though IWM, SPY, QQQ did not. They keep putting in lower lows, but these names, I'll give you one more, ENPH, keep putting in higher lows. And if you're not paying attention to this, then what happens next will really surprise you. But these names are outperforming, and it's not even close. Any dip, go back to January. Any dip was a buy in ENPH. Every single one of them. Show me another chart that looks like that. All right, it's not gold. Every rally's to be sold. Still true. Okay, now maybe there's some accumulation going on here. But again, this thing's toast. Has to get below here. There's no doubt about it. Has to get below 157. So avoid. And again, the relationship between the treasury yields and commodities is confirming the idea that XLE, that DBC, that gold, that silver, that copper, that wheat are all going lower. And, you know, to wrap this up, right? KWEB over energy. Amazing. Go look. If you think your sector is outperforming, go test it. KWEB versus SPY. It's destroying SPY. It's not even close. Why would I want to buy bonds right now? I see all these macro traders getting, horny for bonds because of some macro signal that was just generated by the bond market or some bias they have. That's it. This chart is not telling me, right? Look, SPY and TLT are positively correlated. They go the same direction often, most of the time. I'm just telling you, if that's the case, well, why would I own bonds? I'd rather just own SPY. And if I'm going to own SPY, why wouldn't I just own ENPH? Again, positively correlated. You can go look. You can run the correlation coefficients and see the positive. Throw this stuff out on a scatter plot. You can do all that. You can also look at the pair chart. I'm showing you that it's all positively correlated. So when SPY's going up, other things will go up. And when SPY's going down, other things will go down. This is a chart that's showing me accumulation. This is not a distribution pattern. We saw the distribution patterns. We know what they look like. I can't pull up oil on this chart. But XLE, blow off top up here, right? Gap away, gap and go. That's what you see, like giving back an entire quarter in 2 weeks. That's what a top looks like, right? And again, I'm not saying it's the top. We don't get to guess the top and the bottom. We just get to follow along when things get too extreme, right? You look the other way. You look for a reversal. And that's what we got in energy. And you didn't have to play energy all quarter, or you could have and used your tight stops and just woke up one day down 5% and that was the end of the trade. But I like to have all three things added up and working together: sentiment, technicals, and some form of macro fundamentals showing me that this is a good trade idea. And the demand destruction in the commodity space is well underway. Well underway. All right. So it pretty much wraps. Oh, let's take a look at crypto. I would be remiss if I did not talk about crypto. First tag of the monthly ever. Bottom of the monthly Bollinger Band. First tag ever. Okay. Not to mention, and you should be paying attention when you see this. Yeah. At trend support, and PPO has reset to some mean, putting in a trough in ADX and curling up at the 40 at the bottom of the band. Can she close above the 40, which is around 25K, come Thursday? Putting in a big lower wick akin to what we had here, March of 2020. I do believe that is a potential setup for this month. And again, this aligns with yields are topping, bonds are bottoming, soft assets are going to catch a bid. That seems to be the weight of the evidence from where I sit. Again, we don't trade monthly charts. I can't sit through monthly drawdowns. That's not the way I work. I like daily, weekly. I like hourly, daily. This is telling me here, you got the 5 crossing above the 10. We got our PPO cross down here. Histogram's positive. Lots of overhead supply. Okay. But could certainly rally back to test if this is in fact now resistance. It was support. Price is going to come back in to confirm if it's now resistance. So, Bitcoin, you definitely want to watch for an end of month, end of quarter rally. That is the theme that I'm seeing across the board. You're likely to get soft assets rallying into end of month while hard assets fall. And if you like the content, hit the like button, subscribe to the video, and check us out next weekend when we do our weekend review. Thank you.